Hi, everybody, and welcome to another edition of FxPro webinars. What's moving the market with Phillip Konchar, i.e. myself. We'll be starting this broadcast properly in about 5 minutes or so, but I can see quite a few people logging in today already ahead of the time, and I just want to say hi. And I just want to check with you, what can you see? I have a few screens here, so I just want to make sure that you can see the one with the FxPro logo, and just to kind of introduce you to the chat functionality that we have here. And I just want to make sure that you can see the camera as well, because we have camera and also the screen. So it will be exciting time today, exciting time, and welcome everybody. Welcome, welcome, welcome. Let me just give you a little message here saying hi all. Can you see it? Can anybody reply? Hi, Ben. Hi, Dean. Hi, Ed. Hi, Emmanuel, Joel, Judith, Peter, Raphael, Shadwin, Steve, Yahesh, anybody? Excellent. Brilliant. Brilliant, brilliant. Thank you, guys. Thank you, guys. Let's keep this fairly informal. I want to kind of flow through a few things that are quite important from the macro point of view. Then we can go and see what's been covered already in the FxPro blog section. And then we can go into the economic calendar. But I don't want to spend too much time going through the static charts and kind of disclaimers and things like that, because it is exciting time today, it really is. But we should be careful not to kind of jump the gun and not to trade ahead of the news. So if you're trading intraday, that's one of the big no-nos. If you have a longer term swing type positions, trend following positions which are already open, make sure that you have your stop losses at the appropriate place. You're kind of actively managing those positions. But from the intraday point of view, maybe it's prudent not to rush and open anything just before the news, because they can go all over the place. But I want to keep this informal. So basically, if you have any questions, or if you want me to cover anything in particular, just ask in the chat, and I'll try and cover it as soon as I can. But what I really want to concentrate on today is really the main kind of data points, main macro news, main geopolitical news, and kind of tie it all together with what will be quite obviously frequently and traded and very liquid today. So dollar yen, euro dollar, gold, Dow Jones, S&P, that kind of stuff that will, dollar CAD, stuff that will quite likely move very, very quickly at 1:30 today. That's UK time. That's UK time. See more people logging in. Welcome all. Welcome guys. Welcome. Feel free, come into the chat rooms. You have a chat section on your webinar on your GoToWebinar dashboard. So if you have any questions, you can ask there. I'll be happy. I'll be very, very pleased if you can ask me questions. That'll give me something to talk about. So Ahmed, welcome back. Ali, Andre, hi guys. Welcome. Judith, welcome. Kevin, thank you guys, and welcome. I'm just having this lovely cup of coffee. We have 2 minutes before the official start of the webinar today, so I don't want to go into either disclaimers or anything like that, but we'll wait for a few more people to log in. I just want to make sure this is all working and you feel comfortable, and you are comfortable with asking questions as we go along, because that'll definitely help. Are you looking at anything yourselves, guys? Well, this was kind of a fairly busy week, so Was anything of interest to you this week with ECB rate decisions, Bank of Japan? We have some fairly decent news overnight from a geopolitical front as well with North Korea. Yeah, all very good. Mr. Mario Draghi had a press conference, so yeah, all very good. If you want me to cover anything, just ask. You can ask it here. I'm gonna show you where you can ask. You can do it in question section as well. I am looking forward to obviously the next week's broadcast as well. I'll be broadcasting. We'll be having the next webinar from the FxPro London offices, and that should be good fun as well. So. Also, I would strongly encourage you that if you like today's webinar, make sure you call or contact your FxPro account manager if you are account holder, if you are already existing client. Please give them a call. It would mean a lot to me and to them as well. We just want to make sure that we make this as beneficial and as informative for you as possible. So give them a call if you like what we do here, and obviously just say, I would prefer to have this midday, I would prefer to have this type of events in the evening because I'm working. So we're trying to assess what would work for you guys. The other thing is, if you are not happy with something that we did today, also give them a call, because that's even more important, because then we'll make sure that we give you what you need next time. Okay, so hi all and welcome. Great. Now, let's start the broadcast properly. So we'll start it with a few slides. I don't want to bore you with too much stuff, but my name is Phillip Konchar. I am a CEO of a company called TraderCast, and I work very, very closely with FxPro guys, and I run these regular weekly webinars in conjunction with them or on their behalf. And we are just trying to make sure that this is as relevant for you, because what we're trying to do is we're trying to go through what happened over the past few days and then what will happen over the next past few days, and that will set you up for the rest of the week trading, or maybe even the following week. They usually happen on Wednesdays, but today we have a special event, which is a non-farm payroll. Now, if you need to get hold of me, feel free, email me at philip@tradercast.com. Alternatively, I would actually urge you to go and speak to your account manager at FxPro. If you're not existing client, also give them a call. It's not a problem at all. Just say, I like what this guy was doing. I would like to see more. How can I find out more about when the next webinar is? Or just register online and I'll show you where to go and do that. Okay, now from the legal point of view, if you've seen any of these types of webinars before, you are pretty much aware that your brokers, FxPro, are not advisory type brokerage. They are execution only brokers. And if you are trading CFDs and spread betting, you should be aware that these are leveraged products and they're not suitable for everybody. So you should understand the risks that you're exposing yourselves to, and you should understand that FxPro are execution only brokerage. Some information here on regulation, negative balance protection, protected client funds and segregated accounts, all good stuff. If you are trading, I can see all sorts of different people. I'm not really sure if you're all UK based or European based or somewhere else, but if you happen to be, make sure that you have the account with somebody who is FCA regulated. It gives you that extra layer of security and it's protecting you. Now, this is me, and basically what I'm saying here is that these are my opinions and experiences. These are not it should not be seen as an advice. As you can see, I am very excitable person, and I might start jumping around here and start talking about important prevailing trends and levels and things that might cause certain markets or instruments to move. So basically what I'm trying to say is this is an overview of what's going to happen today, or the liquid and most popular frequently traded financial markets and instruments. And it should not be seen as an advice. It's basically available. Anything that I'm talking about here today is available in a public domain, and it does not take in consideration your personal investment and trading objectives. So you should seek independent advice in order to do that. But yet again, not advice, just a very basic and a friendly chat about what's moving the market analysis, and so on. Now, the other thing that I also don't know, I can see more people looking in. Well done, guys. Well done, guys. Come in and say hi in a chat. It would really, really help. The other thing that I don't know is I'm recognizing some of the names. Some people attended the webinars before, and we had a nice friendly chat, so I know roughly what you trade, what you're looking for, and so on, which is great. I don't know how many of you are brand new and how many of you might be completely bamboozled with what I'm going to say, and if I'm using a jargon or terminology that's not familiar to you, I'm really, really sorry. I'll try and balance it in such a way, but then at the same time, I need to respect the other more experienced, and I can see some names here, and I know these guys are trading really, really well, and they've been trading for a while, and they are active traders. I don't want to alienate them as well by making it too simple. So I'll try and balance it. But if you ask me a question as I go along, hi Hussein, then I'll try and balance it for everybody. But anyway, I don't want to go through too much stuff here, and I do want to go and cover the markets. But very, very briefly, these are the golden rules for new traders, and I'm going to read through them very quickly. Never add to a losing trade. Massively important. Never lose more than 1% of your trading capital on any one trade. Predefine the amount of risk that you're willing to take in order to potentially prove yourself right. Never trade anything you don't understand 100% of the time. That's what it's quite important. If somebody starts talking about a particular financial market or instrument, and you think, oh, this is good stuff, and then you end up trading it, but you don't know what's potentially impacting that market. What is the sentiment? What is the fundamental reason for it? What are the technical levels? You might not be as successful as trading something that you really, really understand. Trade in a direction of the trend in your trading time frame. This is hugely important. We're all talking about multiple time frames, and I'll be analyzing some of the markets here today, starting from a longer term time frames, i.e. daily, maybe even weekly in some cases, just to show you some resistances and supports, and then drilling down to 4 hourly, and all the way down to a 15-minute, because I can see there is a range of people here, and you might be trading intraday, some of you might be more of a end of day, and so on and so on. So make sure that you understand what is the prevailing trend, because you can have intraday trader with a massive rally trading the uptrend, and you have a longer term trader trading clearly embedded downtrend in weekly and monthly. They're both absolutely right. They're both trading an identical financial instrument, and they have two different trends. So make sure you know what is your trend and what is your time frame. Only look for high reward, low risk trades. Basically, look for a disproportionate amount of potential reward for a definite amount of the risk that you're willing to take. That's important. Trade your plan, your system, your signals, the chart, and the price action, not your beliefs, bias, and predictions. Usually people who have strong bias and strong predictions and strong beliefs, hey Mohammed, good to see you, they tend to trade against the trend. They tend to try and short the top or pick the bottom because of their bias is telling them. And then what they do is quite often they go and look for market analysis and research which almost justifies their point of view. And just it's making them feel better. So try not to do that. Trade what you see, not what you think. Find a trading methodology that fits your personality. I don't want to go into too much detail. Hopefully some of you attended a London conference that FxPro kindly organized a few weeks ago, or maybe you watched it on YouTube. If you didn't, you can go to FxPro YouTube channel, see it. It's really good. Loads of people were talking about the types of trading that can be done. Some can be automated, some can be manual, directional, outright, and so on. Make sure that that fits your personality. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. This is hugely important. You must say, I am so-and-so. I trade this portfolio of interest. I am trading stocks. I'm trading Forex. I'm trading only one particular market. I'm trading a range of things. And make sure that you know what that is, and then you can respect that, especially because your risk management rules are going to be based around that as well. The size of your winning and losing trades determines your trading success. Absolutely right. You don't have to be right all the time, but you have to be more profitable when you are right than when you are wrong. So lose often and little, but manage your winning trades. Very simple. And your risk management rules will determine the success of your technical trading system. That's hugely important. Now, that's all very, very simple, and I don't want to go into too much slides. If any of you want any of these slides, speak to your account manager at FxPro and ask them. They can send it to you. If you need to contact them, these are the numbers. So this is the UK number and this is the Cyprus number, because as I said, I don't know where you're from, guys. So I can see more people logging in, and I'm going to go back to this baby here, disclaimer. So now I'm going to stop talking about PowerPoints, and I'm going to go and talk about the markets. And I would encourage you to ask me questions, and I'll try and kind of I'll tell you the story about what's happening, and then we'll see how that translates in the real market, and see how that might prepare us for what might happen at 1:30 today. Are we all good with this? All good with this so far? I can only assume yes. Kevin Maguire, you are amazing. Thank you for confirming. Now, let's do that quickly. So I'm going to remove this for now. Whoops, I want to go in here. The first thing that you can possibly do, and this is quite good as well, you can go to the FxPro blog. It's their market analysis website, and every day it gives you quite a few very informative, easy to read, quick articles. And in the morning, while you're traveling to work or before you start trading, you can click on this and it gives you a very nice summary of what are the big macro stories overnight and in the morning, and then also what happened yesterday from the data point of view. So this basically sets the expectations for why the markets moved yesterday and what these macro stories might do for your trading activity for the rest of the day. So it's blog.fxpro.co.uk. Really, really useful website. Click on it. A range of analysts. Alex is really amazing. It writes a lot about Bitcoin as well. A really nice guy. But yeah, you have technical analysis, you have fundamental analysis, easy to read, summary, few charts with few levels. Absolutely essential start of your trading day. Vinay, hey, good to see you. Muhammad, thank you. Excellent, excellent, guys. I don't know how many of you use this, but it's really good. The other thing that you can do as well, your FxPro platform. So basically, you know, when you go to your fxpro.co.uk, you have trading tools, and then you click on the economic calendar. That's really, really important because it gives you the economic data that's coming out, and it gives you all this wonderful information of what might happen throughout the week, or maybe on a particular day. What we are doing here is I'll just go and tell you very, very briefly what's happening today. Today we had some Chinese data. We had the Bank of Japan rate decision. I'll talk about it in a minute. And then we have big anticipation for non-farm payroll, which is a US unemployment data, average hourly earnings, and also Canadian data. And these news will be moving the markets fairly quickly. They'll increase the volatility in a range of popular trading financial instruments, including dollar currency, dollar index, euro dollar, sterling dollar, dollar yen, dollar CAD, Aussie dollar. Anything dollar will move. Gold move, oil move, Dow Jones, S&P likely to move as well, and we're going to go and check that out. Okay, now hi guys, more people are coming in. I will probably go back and go back to the disclaimer a little bit later. So what I'm going to do very, very quickly before I go into the charts is just show you what was going on from the economic calendar point of view. Donald Trump signed those tariff bill yesterday, and he was imposing a 25% tariff on imports of steel and 10% levy on aluminum, or aluminum as our American colleagues will say. Now, And then during his speech, he said, okay, guys, but this does not apply to Mexico and Canada because they're our friends. So that kind of caused Canadian dollar to react, and that caused a bit of a Mexican peso to react as well. So just by the way, this is what you're seeing here. This is euro dollar, this is sterling dollar, this is dollar yen, this is euro sterling, this is Aussie dollar, this is dollar CAD. We have S&P here, Dow Jones. In this corner, bottom left corner, it's DAX. This is FTSE here, this is gold, and this is WTI. I'll talk to you about anything else. I have no problem, even if I don't really know it as well as I might know these financial instruments, but I can pull the chart and we can analyze it. So feel free and ask. Now, the other thing that actually moved the markets, or it's possibly perceived very, very good for the market, is that we had a South Korean NSA Chung met with President Trump in the White House, and what about India? I suppose Indian stocks could be moved as well. I don't know if are you based in India, Vinay? Are you trading Indian stocks or are you trading something else? Guys, welcome, welcome, welcome. I can see more people logging in, and if I didn't mention your name, I'm really sorry. Now, so what's happening here is that he met with President Trump in the White House, and they talked about the meeting between US president and the president of North Korea leader, Kim, and they are projecting it that it might happen in May of 2018. Now, we don't know. Will that be in some neutral territory? I don't see Trump flying to North Korea. Also, I don't see Kim coming to Florida for a couple of mojitos and a bit of sunshine. But if they meet, potentially, that can be seen as a fairly bullish and positive news for the stock market, in particular US, but stock markets in general, some Asian markets as well, because if there is no sanctions, that means more investment in North Korea or Korean companies in general, or Asian companies in general. So it's actually quite a good development. And from the geopolitical point of view, tensions are down. Maybe North Korea might sell their nuclear weapons, save the face, for a good price, that kind of stuff. So we need to know a bit more about how this might play out. It might change, but so far this is perceived to be good. All good with this so far? Seth is saying, can we talk about Eurozar? Absolutely, we'll talk. It will move dollar rand. Absolutely, it'll move, because anything dollar will move today. Now, thank you for asking, Seth. Matete, thank you for asking, buddy. The other thing that actually happened today, actually overnight, we had a Bank of Japan decision, and they saw basically all the rates, they left it unchanged, and that was as expected. So they kept its target for a 10-year yield around 0%, and it was voted 8-1 according to the report that I was just reading earlier. So that basically caused the dollar yen to weaken. And what you're seeing here is this is dollar yen. And I'll go into more detail. This is just a summary, guys. I'll go into more details and give you the exact levels a little bit later. And we have plenty of time, and there's no rush whatsoever. So what we're seeing here is we're seeing this spike higher in dollar yen, and that's basically a Japanese yen weakness, and the US dollar strength, and as a result of that. So they're just carrying on with the QE, with the stimulus. Well, on the other hand, Federal Reserve is carrying on with intentions to continue with the rate policy normalization and have a 3 to maybe 4 hikes this year. So this is actually quite good. So that's the reason why yen reacted. And the important bit for us as traders is we're back above 106 on yen, and I'll talk about these levels in a minute. Now, the other thing that's actually really, really important that was driving the markets recently was this massive reaction in euro dollar. This is euro dollar. For those of you who traded yesterday or who were watching the news or maybe attending TraderCast as well, we were broadcasting during the ECB rate decision and the press conference. And the big news was that ECB decided to drop its pledge with regard to increasing the bond buying program if needed. So basically, in the past, they would always say, yeah, we are going through a tapering process. We'll eventually stop QE and stimulus and bond buying at some point in future. So you'll be like 60 billion, 30 billion, 10 billion, whatever, reducing. But they always kept this sentence, and that sentence would say, oh, but we are monitoring the situation, and if needed, we'll bump it up again. So they removed that sentence from their statement yesterday when the rate decision was announced, and we saw this massive spike higher in euro dollar, testing these few resistances, these red lines towards 124.40. And then Mr. Mario Draghi, and he is the master. He is the master of a verbal intervention. So during his press conference at 1:30 in the afternoon, he played it down very nicely, and then we saw this massive reversal. And what I want to show you is euro dollar in end of day time frame. This is painting absolutely beautiful price action pattern from a technical point of view, supported by macro news and also supported by the fundamentals from the ECB side. But if we get that extra bit of spice today with non-farm payroll, it'll be even better. I'll talk to you about it in a minute, but that's what happened. So these candles are basically triggered by ECB press conference in particular. Now, guys, you're all very quiet. Is this all okay? Am I too basic here, or am I too top level? You need to give me some feedback. There's about 40-50 people in, so come and say something. Ali, so far so good. Kevin, Ali, okay. Ed, oh, Mr. Anderson, we are privileged to have you on our broadcast. Thank you so much. Thank you so much for attending. Okay. The other thing that we want to talk about as well is, obviously, at 1:30 we are going to have non-farm payroll, and the non-farm payroll number is forecast. Let me just go back to the FxPro economic calendar. So when you go down here for today, you get the estimate or a forecasted number of 200,000 for February, and the previous reading was 200,000 as well. Now, if the number comes in, it depends where you go. Some people are saying 197, some people are saying 205. It kind of varies depending where you go, depending which economic calendar you use. Oh, this is a lovely cup of coffee. Okay, but around 200,000. Expectations are that today's number is going to be around 200,000. So if we see much better number, more people got jobs, more jobs created, that will be seen probably as very bullish for stock market, and potentially it could see a spike higher or a rally. That's a perception. More people getting jobs and so on. But I think what's even more important than the actual jobs is average hourly earnings. This baby here is really, really important, because the unemployment rate is expected to stay around 4% or thereabout. Okay, so nothing big, but majority of the investors and traders, frequent traders, will be keeping an eye on average hourly earnings, and that'll basically show us and determine the wage growth, because last month we got a really good number, which was a surprise. So let me just show you. If you click on this, if you go to FxPro economic calendar, it'll show you the historical historical data here for the numbers, and you can see that we saw this really nice spike higher in the last month. to almost 2.9. So the importance of that, if you're not trading, keeping an eye on fundamentals, the importance of this is it means that basically people who are earning will have more disposable income, and they will be likely to spend it. So therefore, that's good for the economy. It's a good for the retailers. It's a good for a consumer. Everybody's happy. Economy is booming. So it's a hugely important number. In addition to non-farm payrolls, that number will be closely scrutinized by everybody else. Now, I'm just going to finish this very quickly from the economic calendar point of view, because I know most of you want to see these babies, and we'll talk about them, and I'll talk about Canada. Let me just go and read a couple of questions here. So apologies. Unfortunately, your questions are on this screen here, and camera is over there. So I'm not being rude, not looking at the camera. I'm just going to read it. So for me, as a beginner, this is great. Thank you, Judith, very much. Speak to your account manager at FxPro and tell them what you want to hear and how you want this delivered. We would make sure you get it delivered consistently in the same way. It's perfect, Emmanuel is saying. What does those exclamation mark mean? And why are they filled with different colors? Vinay, very quickly, these are the data points that actually came in. These are the data points which are due, and this is the time when they're due. This is what they are, and these exclamation marks mean that they are more important than, let's say, amber or green. But I would urge you to speak to your account manager at FxPro and say, hey guys, you're providing me with this economic calendar. It's free. How do I use it? And these guys will basically tell you how to do it. I don't know if you're a UK client. Go and speak to Craig or Tom. These two guys are really good. They'll be able to point you in the right direction. They are exceptional young traders. They use it all the time. So call FxPro UK if you're UK based, on this number here, and ask to speak to Craig or Tom, and they'll tell you how to use it and the best way to utilize it for your trading decisions. Okay, if you're based somewhere else, I don't know who your account manager is. Speak to them. Thank you for asking. Thank you for asking. I'm more concerned about the euro-dollar direction with regards to the NFP. Brilliant. I'm going to talk about euro-dollar now. Excellent. Now, so the last thing that I'm going to mention very quickly from the economic calendar point of view is that in addition to US data, we are getting Canadian employment change for February as well. This is the 1 hourly time frame for Canadian dollar, and you can see that this is dollar CAD. So therefore, if this is going down, that means the Canadian dollar is strengthening. Remember what we talked about earlier about the tariffs and Mexico and Canada exception, because Mr. Trump thinks that these guys are US friends, not just the neighbors, but also in military. So it's quite important to watch this. Dollar CAD had a big moves lately. It's possible that we could see the continuation of that volatility, and I'll show you the levels in a minute. Now, the Canadian number that's expected is 88,000. It's a decrease in the number of people employed with a huge drop in part-time jobs. So this time market is expecting increase of 21,000 and unemployment is expected to stay at 5.9. So if you go down to the Canadian unemployment rate, so 5.9, previous reading 5.9. Last time we got minus 88,000, and today it's 20,000. So this was a negative number last month, and basically this is the unemployed, Canadian unemployed. You can see that big drop that caused a substantial volatility. So basically the technical levels that we are going to talk about right now are the levels that people are keeping an eye on. The trigger for something to happen is fundamental. It's the news driven. So you need to combine two things, plus add a little bit more source called sentiment in order to get a holistic view of the market. So you need to see all three. Otherwise, you are blindsided to one side. You're not prepared to what might come your way. Now, Philip, shut up and show me the charts. Okay. As you can see, I had too much coffee. Okay. Do they work in India? I'm pretty sure they do. Will you be opening positions today upon the non-farm payroll release? Andre is saying. You probably missed what we were talking about earlier. If you have positions which are open in end of day time frame, 4-hourly time frame, and these are swing type positions, or position holding or trend following, and they've been open for a number of days, weeks already, maybe even months, then please reassess your risk, reassess your appropriate levels for the stop losses, hedge if you have to, and leave them be, because they are open based on a different criteria. If you are trading intraday, and what I mean is 1 hourly, 15 minute, 5 minute, 1 minute, it's actually prudent not to front run the news. You should have everything closed at least 15 minutes or half an hour, depending how experienced you are, ahead of the news, and then react to the news 15 minutes later, half an hour later. It depends. Some people can be quicker if they're experienced and they know what they're doing, because the initial reaction, the initial volatility can be faded a little bit later. Markets can sell off on a good news, markets can rally on the bad news, and so on and so on. So I'm not talking about just non-farm payroll, I'm talking about any major economic data. So it depends on your trading strategy, your style, how much risk you take, how aggressive you are, and so on. But as a rule, readjust your positions and your stop losses and your risk management based on what you see currently in the market for your longer term positions, and be very nimble with your intraday positions ahead of these big numbers. So let me see. I'm confused with gold. Took major drop on Wednesday and didn't come back since then. Shadwin is saying, if non-farm payroll and average hourly earnings come as expected and there is no revision from the previous data release, what do you see US dollar doing? Excellent, Ed. I'm going to go and talk about it right now. So let's see what's going on. Let's see what's going on now first. So this chart here is the chart of dollar index, guys. And the dollar index is an index that follows the movement of US dollar currency against the basket of 6 other currencies. So euro, sterling, Swissy, yen, Norwegian krona, and Canadian dollar. And what we are seeing here is, this is the daily time frame. We were seeing this kind of a trend line capping the dollar index at the moment, and the all-important level that most of the people are watching is around 90. That was the psychological level that we can see. So if the data comes in and the reaction to that data is positive, therefore dollar strengthens, keep an eye on the reaction of this falling resistance trend line first, around 90-20 area. And the reason for that area is, if we go to a longer term time frame, monthly, you have this previous support, and now we are testing that support from underneath. So hugely important level to keep an eye on. And it's also this falling resistance trend line. So I would like to declare myself as a dollar bullish. I know this is downtrending. But we are coming to some very important monthly and weekly support lines, and you can see this massive monthly green candle reversing the previous one. This is still downtrending. The prevailing trend is still down in longer term timeframes. In a shorter term timeframes, this is happening right now. So you can have a shorter term rally spike against the overall prevailing trend, and as I said, it's quite important to know which trend do you use to trade. So the big level to watch is at 90-20. Breakout above 90-20, which is this area here, would open up the way for the retest of 90, 66, 91, so something like this, a breakout and an hourly or 4-hourly or daily candle closing here would likely incentivize bulls to come in and engage. You might get a breakout and a retest, and then you could see a spike to any of these higher resistances, which are based on the previous highs and lows, and also some fibs. I don't want to draw too much stuff. I'll tell you what they are. So the levels are 90.66, 91, 91.54, and then 92.25. So that'll be a bullish outcome because in that case, then this would be seen as a shoulder, head, and shoulder, and this would be a very nice neckline here, which that's why I'm kind of drawing this like a spike and a retest. And then if that is to happen, majority of the traders who would be looking to trade this inverse head and shoulder, i.e. The potential reversal, would take the distance from the head and then add it up, and that gives you this area here, which corresponds to the previous significant highs and lows and highs and lows here. So very, very important level. And also we are very close to this 200 period moving average in end of day. So by the time this price goes up there, if it goes there, the moving average, 200 period moving average will move down to it. Sorry, I don't know if I'm missing. Okay, no questions so far. So that's dollar index from the kind of a bullish point of view. Now, the alternative is if the numbers come in and reaction is bearish and we see either a spike and then big rejection or rejection from these current levels, keep an eye on this area down here, 89.55. That's a big level of support to the downside. A loss confirmed. Let me just change this into a blue so we know it's a support. Confirmed loss of that level would negate the bullish scenario, and then it would mean that bears are still in control, potentially opening up the way for the retest of 88, 85, even down to 88, which are these significant lows. So that's dollar index in a 4-hourly daily, and I can go and show you the same thing in an hourly and also in 15 minutes. And the hourly looks like this. Still pointing to the same resistance, still same support. Very important level at the moment, this 90-20 and 90-20, 90-30 area for the dollar index. Now, let me just remove this. And is that okay when to use Fibonacci indicators? You can use them all the time, Mohammed, but let me just go to a euro dollar at the moment, and then I'll go into dollar yen. What happened yesterday is this, guys. So actually, I'll just show you what happened yesterday first. So this spike higher was caused by that, if you remember, ECB rate decision statement that they're removing that sentence or statement that they'll carry on with the bond buying at some point in the future if needed. So that caused a euro sterling to spike into this 124.30, 124.40, and then Mario Draghi started talking with the press conference afterwards, and then he basically, the master of his verbal intervention, caused it to carry on and does something like this. So this is intraday 15-minute time frame. I do want you to see this. This is hugely important, guys, massive important, because implications for a dollar strength or weakness for today would likely impact a euro dollar as well. So we have two longer term trend lines and also 50 period moving average down here. This pattern here, and I'll make it big so you can see this pattern here. You have 5 days of rallying, spinning top here, indecision into this major resistance, previous consolidation, you're selling pressure at 24.30, 24.40, and then massive candle reverse. So the combination of these three candles here is known as a star reversal pattern, and they tend to be fairly significant in the same way as this one, inside bar, same as this one, bearish engulfing, which we trade. During the conference in London, this was a Friday candle, and we were actually talking about this candle during the conference, and we were speaking about how bearish it could be for a sell-off, and this is the reaction. This is another one that's actually happening right now. So if the combination of these three stays as it is, some traders who are looking at price pattern recognition will see this as a potential triple top. And that would signify a specific potential for a reversal pattern. The way this can play out is if we see additional selling pressure. So let's say dollar index rallies, that would cause a euro dollar to sell off, and euro dollar will plunge below this area down here. If it stays around here, which is this S2 in the pivots at 122, it can bounce off that again. It's not confirmed, it's still supported. But if we see the end of day close below 122 and a possible retest from underneath, that would quite likely indicate that bears are in control, and they'll be looking to potentially target deeper retracement towards this rising support trend line and S3 in pivots at the end of day 121. So let me just show you. I'll just go and sorry, just a few questions. Can you please give levels of the moving averages if you apply to the charts? Absolutely, yes. Why are those vertical triangles rectangles? They are two different colors. What does the color indicate? Vertical rectangles. Color. Resistance and support. I'll show you that in a minute. So let me show you. The moving averages are 20, 50, and 200. They're just the basic moving averages. So if you're trading euro-dollar intraday, this is the important bit to watch. So from the intraday point of view, guys, this was my pivot. So this is my support down here to keep an eye on. And this is my resistance up here at the moment from the intraday point of view. This is euro-dollar in 4-hourly. So euro-dollar appears to be bearish from the intraday point of view below this area here, which is 123.50. That's your 200 period moving average, and also pivot in end of day time frame. This little baby here is forming a bear flag. I'll open it up and show it to you. Currently testing this initial support at around number 123, psychologically important number. If we see extension of this bearishness, dollar strength, after the numbers were published, then this area down here would be of interest to the bears. Basically, they would be looking to take profit down here, because if the price does go down here, it's likely that it could bounce off it a little bit. And that's 122.60. Only a confirmed loss of 122.60 would open up the way for the retest of deeper downside support towards 122.30, followed by 122. So these are the support levels to the downside. Okay, let me just show you how this looks in an hourly. In an hourly time frame, people who are keeping an eye on this, they are looking at this here as a bearish continuation pattern, which is known as a flag. And the sideways flags or rising flags in clearly defined downtrends tend to break to the downside. They tend to do something like this. And then people who tend to trade those flags will take the distance of the last previous consolidation, and they would extend it down to give them a projected potential target level. So yet again, this is, I'm saying this is not advisory, and if I do get excited, I'm giving you the levels that you can use to make your own informed decisions. That brings us to this 122, 120, 122.60, 122.30. So as a measured symmetrical move, guys, measured symmetrical move. Okay, but keep an eye on that daily star reversal triple top here. There's a question. You are using EMA or normal moving averages? The one you are using 20, 50, 200. A good question as well. These are simple moving averages. I know most of the people who are trading from the intraday point of view and trading futures, they tend to use exponential. But whatever you use, it's up to you. Exponential moving averages are giving you a little bit more weighing to what's happening currently. Now, thank you for your questions. Thank you for your questions. Now, let me cover something else. This is dollar yen, guys, and we do need to talk about this as well, because I covered a Bank of Japan at the open, and kind of a macro reasons for it. So dollar yen appears to be clearly downtrending, and it's basically capped by this fairly steep falling resistance trend line. And we are coming to that trend line one now, and we're also coming to the 20 period end of day moving average. Now, if the fact that this is downtrending normally indicate, not normally, it indicates, it's factual. It indicates a Japanese yen strength, therefore US dollar weakness. And when you see a market volatility increase and stocks sell off, majority of the investors, they take money out of equities and they put it into yen or gold or something like that. So this is what we were seeing. We were seeing yen strength. Now, what we are seeing here is we are seeing a bit of a reversal. We are seeing a yen weakness and US dollar strength. Okay, so what I would be keeping an eye on is this area here as a major resistance to the upside at 106.90 because it's a cluster of these previous highs. If we see a bullish reaction in dollar index, which is what we talked about earlier, so breakout above 92 towards 90.60, 91 in dollar index, so therefore what Ed was asking earlier on, then you could potentially see a dollar yen move higher and break above this falling resistance trend line. A breakout maybe does a bit of a retest like this, and then potentially we could see a spike higher to test this further upside resistances towards 107.30, 107.30, 107.70, 107.80. 590, which is this 200 period moving average, and that would also correspond quite nicely to the fibs. So you have your 38 and 50% fib. So just to answer some questions on the fibs, I know there's about 50-60 people here, but I don't know what you know, and this might be too much for somebody. That's why I'm trying to keep it fairly simple and light. But these are the reasons why fib traders might be looking at that level as well. The alternative is, and there is always alternative, if we see dollar weakness, basically that dollar strength does not materialize, I would be keeping an eye on this rising trend line here, and then if we see something like this, a dip below this initial rising trend line and this previous resistance trend line, X marks the spot at around 106.40, a retest from underneath. So 106.60, 106.40, massively important level of support to hold. So this baby here, that would indicate that bears are in control, potentially opening up the way for the retest of these downsides down here towards 106.40, 106.20, 105.80, 105.40 over the coming days, maybe even weeks. Okay, so that's dollar yen. I can see another question there, but I do want to talk about gold, and I do want to talk about a few other things as well. So let me see. I observed the consensus, and it's averaging lower than the previous. Should the actual be lower, then where would the first spike most likely go on the euro dollar? Yet again, when these numbers come up, the first reaction might not necessarily be the one that should be continued. You must check the trend, and in euro dollar, what I'm trying to say is that this appears to point to a clearly defined uptrend for the euro, but you're seeing this selling pressure. So there's a bit of a selling pressure there from a longer term point of view. There's your monthly 200 period moving average. These are the monthly previous significant consolidation ranges that were respected. So when your intraday price is testing that levels, there is a bit of a profit taking for anybody who is bullish. So if we see dollar strength, then euro dollar could flush lower. If we see dollar weakness, we could see a spike higher. And even that spike higher, if it creates a lower high, it's still looking at the existence of this triple top. So you must wait and see if the reaction to the market news confirms the existence and the direction of the current prevailing trend in your time frame, or if the trend is reversed in your time frame. I don't know if I'm making this as clear as possible. This looks like a potential topping formation in development. It's not confirmed yet. Okay, it's not confirmed yet. The confirmation would be a loss and a daily close of this area down here, 22.3122. Okay, hopefully this is answering your question. Hopefully this is answering your question. Brilliant, 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 brilliant. Excellent, excellent, guys. I can see more people coming in. I'll make sure that I have a disclaimer added at the end as well. For those of you who are new and just joining us, don't be shy. Come and ask questions because it will help. It will definitely help. So just going to check something else. Are you all okay with what we are covering so far? Is this at the right level? Now, let me go and talk about a couple of other things. And I know guys were asking about gold. So let's talk about gold because gold will likely move as well. Gold will likely move as well. Apologies, this is probably a very colorful chart. It works for me, so I can open up a different chart which is just completely blank, but I'll tell you what it is. I'm following. Thank you, guys. Don't be shy. Don't be shy. Come and talk to me, because what I'm doing, you have to understand something. If we are in a room and I am talking to you, I can see your facial expressions. I can see your body language, and then I can readjust to what we are talking about according to what I perceive is good for you. Here, I am doing a monologue. I'm talking to a bloody screens. I don't see you. So if you tell me something, it really helps me. It really does. Then I know I'm hitting the mark. I'm giving you what you need to make informed trading decisions going forward. Okay, so and as I said, for those of you who are watching this maybe on YouTube, because this will be recorded on YouTube as well, probably tomorrow, if you like it, give it a like, okay? Give it a like, or call your account manager at FxPro and tell them this guy was completely nuts. He was covering all sorts of stuff, blabbling about stuff. I didn't understand a word he said, or it made sense to a degree, or it made sense long. Tell me what it is and we'll give you what you need. Now, guys, this is gold. This is the price of gold. Obviously, gold is sold in US dollars. And if the dollar strengthens, that would indicate gold weakness. So a couple of important levels for me to watch are here. We had a massive support at this 1320 area, $1,320 per troy ounce. Okay, so that was the big level to watch. Now, bulls are in control from the intraday. This is a 4-hourly time frame. Bulls are in control from the intraday point of view around the 1320, and the reason for that, the reason for them to be in control is this. This was a breakout level. This was a breakout level of this falling resistance trend line. If I take the wick, it gives me the same breakout, previous high, profit taking, retest. This is the bear flag, flush lower. This and this is equal in number of points. I'll show you that in a minute. This is exactly what we were talking about with the previous chart as well. Now, so this area here must hold support, must hold support. If that support is lost, then bears are in control, potentially targeting further downside supports towards 1315, 1310, 1306, and also 1300, which is down here. So the bearish scenario would be a confirmed loss and a flush lower below this current previous resistance, now newly found support line, retest from underneath, and then the flush lower into this zone here, where the majority of the bear traders would be looking to take profits. Majority of the bear traders, if they're trading this, would be looking to put their stops just above 1320, 1320, 1320. Okay, the alternative is if we see a bullish reaction as a result of non-farm payrolls, and we see a spike higher, the initial upside resistance is at 1324, 1326. You can see the deep blue color here. I have it colored like that because I don't want to think. I just want to see, read the chart, and react to what I see. For me, this is a massive level. If it goes up there, and if I'm long, majority of the people would be looking to take profit there and have the stop losses down here. If we see a breakout above that massively dark blue navy shaded area, then bulls are in control, guys. Breaking out higher, maybe I should change the color of these into red, and then you could see it. So something like that, a breakout, and then we could see a spike into 1322, 1334, sorry, 1332, 1334, 1336, 1340 to the upside. So this would be the bullish reaction. Massive, massive, massive level of support now tested in gold. Now, let me show you how this looks like in an hourly time frame. The hourly traders are keeping an eye on this falling resistance trend line here, and they're saying that's their massive, massive point of reference, this line here. Okay, at 130, it's very likely that volatility in gold will increase. So we're either going to see a flush lower and a spike here and here, or we're going to see a breakout above here and a spike into this zone up here. Okay, so that's gold. Yes, I look forward to reviewing it on YouTube, Judith is saying. Brilliant. It's FxPro YouTube channel, and then you click on videos, and then you can go and see it. What if for someone just starting to trade foreign exchange market, I was wondering if you can kindly offer assistance based on your experience, because they, guys, how can I get the full video? YouTube, you can get it YouTube. Eviano, you can check it on YouTube, it'll be there tomorrow. So too many questions, I can't read. The separate trade webinars to beginners like me. Yeah, well, look, call or email your FxPro account manager if you're a client. If you're not, say, I would like to become a client and I like what this crazy guy was doing, but can we have something for the beginners? And then we'll create another one for you. We can have the basic one, starting from the beginning, showing you how to read the price, how to read the fundamentals, how to understand the trend, and so on and so on. But if you're not a client, email FxPro and tell them. So I'll show you their contact details again. So info@fxpro.com. If you're UK based, ask for Craig or Tom. They're brilliant guys. They'll help you out. Or call them. Okay, so this is the Cyprus, this is UK. So that's how you contact them. Okay, now plenty of questions. Nasdaq, S&P higher than a brilliant. I was just about to do that, guys. We should finish this by 1, but I will overrun it. I will overrun the webinar, and just relax. Let's do that right now. Are we all okay so far? Thank you for the quality time. Bola says, thank you, sir. Thank you, sir, very much. Now, let's talk about this baby here. This is Dow Jones. Dow Jones. We had this massive bullish reversal. Massive bullish. We did kind of a situation with tariffs were seen negative, and then this North Korea stuff is possibly negating it. So this is the daily time frame for Dow Jones, and I'll show you the levels. I'll show you the levels that will be valid for you right now. I hope you trade Dow Jones. I can talk to you about S&P as well. I have no problem with that as well. Now, sequence of lower highs, big volatility before rising wedge. Yet again, during that event in London, we were actually talking about this doji here and in the importance of this rising wedge. But anyway, if you go to a 4-hourly time frame, we are seeing a couple of important levels. So the important level for today, for me is at that daily pivot, which is this orange line, and now it's blue. But I'll remove it so you can see it there as well. Now, let me make it bigger so that you can see. Hopefully you can see. And I don't want, somebody's looking at this now. Somebody's looking at these two stochastics. They're not seeing the price. They're just looking at the stochastics. They're saying, I wonder if that is the secret sauce. If I have two stochastics, would that help me trade? No. Okay, it works for me. It does not necessarily mean that it'll work for you. Look at the price and listen what I'm talking about. Don't look at the stochastics. Okay? Now, you can use any indicator that you want, absolutely any. They are dumb. They need price to be calculated. They need economic data to be calculated. Reaction, volatility, okay? Look at the price. This is the important level. Massively important level for today, if you are trading Dow Jones, is this area, this little slim area here, okay? This shaded area here, this intraday, sorry, pivot, end of day pivot at 24,860, massive support area. If the price stays above that level or above this 24,800, why? Because it's a round number, and us traders, we are a dumb bunch. We can remember a round number easier than the one which has more digits. So we tend to put our orders and your stop losses and your limit orders around the round number. You don't have to think too much. Or your alerts are set around round numbers as well. So keep an eye on this area here from the intraday point of view. Massively important level of support. If the price pulls back to that level and rallies from there, bulls are in control. Or if the price rallies from where it is, bulls are in control. Potentially targeting upside resistances towards 24,983, followed by 25,112, followed by this R3 here, and previous significant swing high horizontal at 25,213, and then above that you have this falling resistance trend line and a 200 period moving average, 25,325. So bulls are in control if something like this happens. Flush lower and the rally. This is 4-hourly chart, and I'll open this up in an hourly and go into 15 minutes for the scalpers to show them. So this is the bullish reaction. Majority of the people who are looking to trade this are looking to put their stop losses quite likely below this rising support trend line and also this 20 period moving average down here. So this zone down here at 24,690. That's the risk exposure, okay? That's the risk exposure. If for whichever reason we see a bearish reaction and the price dips below this rising trend line and below that all-important pivot and yesterday's closing level, we will see a bearish reaction into this zone down here, targeting 24,600, followed by 24,494, possibly even 24,260 to the downside. So that's what bears are looking for to do. These are the levels, and they are 4-hourly levels. Now, let me go and show you how this works in an hourly time frame. The same levels would apply as well. The same levels would apply as well. And the reason why I'm showing you this is the current price, 24,930. This is where we closed yesterday, 24,872. Now I'm going to confuse probably some of you, but US Dow Jones closed there yesterday, and overnight in Asia and European trading sessions caused the futures markets to go higher. So the current price is a little bit higher, maybe 60 to 70, well, maybe even more points higher than where we closed yesterday. So when the US participants come to the market and see the price when the market's open at 2:30 or the futures at 1:30, our time here in about UK time, in about 27 minutes time, they'll see it as a gap. And the initial reaction for them would be to try and close the gap and verify that level as important support level. That's why you have a number of trend lines, you have a number of pivots, you have a number of different things pointing to that area. So they might look to do something like this at the open and then rally. So if we didn't have non-farm payroll, this would be kind of a normal possibility, okay? That's what I'm saying. Keep an eye on this area here. Dow Jones is bullish intraday above this zone here, okay? And the levels again, 24,860, 24,800. Now, sorry, let me just do something. Test. Hopefully I didn't cut the wire. Okay, now let me just see something else. Which indicator that's making resistance or support? Pivots, just the basic pivot points. You can use moving averages, you can use Fibonacci, you can use parabolic SAR, you can use Bollinger Band, you can use absolutely anything. Absolutely anything. Which indicator is that's making support? Brilliant. Thank you guys. Thank you guys so much. I do want to carry on talking to you, but now I need to go and log into the TraderCast and do my own broadcast. Apologies, do my own broadcast for the guys who are members. If you want to come and join us, we do a daily broadcast as well, 9:30 until 11, 1:30 until 3:30 every day. And if you are an existing FxPro account holder, you could possibly qualify for a temporary extended evaluation access, 30 days. So you can go and register on TraderCast and put FxPro in the introducer field, and I'll show you what it is. Just go here. And you can go, there's a sign up button. If you click on that sign up button, put FxPro in the introducer field and and then don't proceed to the payment, don't pay. We can activate your account, but we'll need to check it with your account manager that you qualify. You'll be more than welcome to come and join us. We are looking forward to people like you who can come and join us. You'll find it highly educational. It's free. FxPro are sponsoring it, and it's highly actionable for people who trade frequently. Now, thank you so much, guys. Just to finish this off, for people who are watching this late, I would like to finish this with a disclaimer again. If you've enjoyed it, please contact FxPro and tell them that you liked it. If you're watching this on YouTube as a recording, like it, comment, contact FxPro, and some good questions here today. Maybe we could have two different types of webinars, one for the beginners, one for more advanced. Maybe that's the possibility as well. But if there is a demand, we'll fill it, but you need to speak to your FxPro account manager as well. And this is how you contact them as well. Thank you, guys. Thank you, Kevin. Oh, Ed, if you liked it, I am privileged. Guys, we have Ed Anderson in the chat rooms with us, a really experienced trader, and also he's working for FxPro, so he's probably working with you, kind of premium clients and so on. But Ed knows his stuff, so I feel humbled when I speak to him with his experience and knowledge. And for those of you who actually watched that recording of the London conference that FxPro organized, Ed was actually on the panel, and there was his presentation as well. So wealth of experience there. Borrow his brains, guys. He knows his stuff. Really, really good stuff. Okay, thank you, guys. Steve, thank you from Australia. Thank you, guys. Thank you, guys. Lovely, lovely talking to you. Speak to you all soon, and happy trading. Stay safe for now, and we are finishing this broadcast now. Thank you, guys. Am I on Instagram? No, I am on that email, phillip@tradercast.com. Speak to your account manager, and they'll put you in contact. Thank you, guys.